Hello everyone, welcome to the IchimokuCharts.com daily analysis for the US dollar index for Tuesday, April the 13th, 2010. Well, no change of trend today. In bar chart terms, we actually had an inside day, and that's where the range of the current candle is within the range of the previous candle. So we have a candle with a lower high but a higher low. That in itself does raise some doubt about the continuation of the trend to the downside in the first time frame, and that's because the bears weren't strong enough to take out the previous low. So that raises some doubt about the strength of the bears in this case. In candlestick terms, this is a harami type pattern, and that's where we have the body of the current candle engulfed by the body of the previous candle, or the body of the current candle is completely within the body of the previous candle. And that's a reversal pattern because it means that the side that was making the net progress on the previous day has failed to make that net progress. Now this is a little bit different in this scenario here, because we actually had a green candle the previous day. The typical harami pattern would be with a bearish type candle where the bears have made net progress, so it's certainly not as strong as your typical type of harami pattern. The thing that makes this a little bit more significant, though, is the fact that we've had a doji type candle for today's trading, and this is a particular type of harami pattern. It's called a harami cross, and it's a little bit stronger when you have a doji type pattern, because that means there's a lot more indecision from the bulls and the bears that have been trying to force the market in either direction, and there wasn't any resolution. And you would expect that in a downtrend the bears would be in the ascendancy. In this case, neither side is in the ascendancy. So that's why this type of pattern is a potential reversal. This type of pattern does require confirmation as well, so we would like to see a candle with a higher high and a higher low to confirm that there has been a change of trend. So we do need to watch the high of the current candle for that potential. Now, interestingly, once again, the market has found support at the top of the cloud, pretty much at the top of, exactly the top of the cloud there, and the buyers came in and bought the market back up. So that's holding as a very important area of support for this market. We can see from the long shadow on the top as well that there was downside price rejection. So even though the buyers came in and they tried to take the market higher, the sellers came back in equal force and forced the market back down to close in the middle of the range. So neither the buyers nor the sellers closed in control of this market, and neither side really showed any commitment. And that's once again why we expect this to be a potential reversal pattern to the upside, because in a downtrend you expect the bears to be the stronger of the two sides. Now, the market remains trading up above the cloud, or the Kumo. So the market is overall bullish, so that is quite important for this market. The market is, however, trading down below the Tenkan-sen and Kijun-sen, which means that the market is bearish in the medium-term and fast-term time frames. So we do need to be aware of that we're getting some mixed signals in two different time frames here. And we have already had a change of trend in the second time frame, as we've seen the previous day with a series of lower peaks and lower troughs. Now also we have the Kijun-sen pointing flat, and now the Tenkan-sen is pointed flat. And that reflects the lack of upside or downside momentum in this market. The market is really congesting in a large congestion area, and is pretty much directionless, and it's attempting to find equilibrium, and certainly doing that in the fast time frame, as we can see by this very small net progress that was made by neither the bulls nor the bears, and also the fact that we have an inside day. So important for this market to watch the high of the current candle for a potential change of trend to the upside. Potential areas of resistance are at the Kijun-sen and Tenkan-sen at 80.875 and 80.995. and also the important 81.4 region, and then up to 82. To the downside, we have very strong support all the way from the top of the cloud down through to 79.5, which was a previous area of resistance that turned into support, and then certainly to the 78.94 level, which was previous resistance and support, and that's the bottom of the cloud. So not a good market for us to trade in this time frame. Fairly strong resistance overhead, strong support below. We need to keep an eye on the high and the lows of the current candle.